Borrowers when they're first starting out that are coming to me and they're telling me what they think I want to hear. They're telling me
Right.
that, oh, I only need it for 90 days. It's going to be really quick. Listen, I've
you
done
catch me on that.
Yeah.
You often say to me, "Don't tell me what I want to hear."
Don't tell me what I want to hear. Tell me what the deal is.
Background, what qualifies you to speak on private lending and conventional lending?
Okay. So I've worked in financial services for 8 years now. I started off as an independent financial advisor with a major insurance company. Built that business for 5 years. On January 1st, 2018, I left that business and sold my practice and moved into becoming a mortgage agent.
Okay.
January 1st, 2018 is also a little bit of a significant date, if anyone knows. That's the day that the stress test came out. That's the day that the lending world very much changed. So one thing that I pride myself in as a mortgage agent is I only have been a mortgage agent in today's lending environment. I hear so many senior agents talk about the good old days and what they used to be able to do, and 5% down rental properties and this and that. Okay, that's fantastic, and I'm great that was the opportunity 10 years ago, but in today's world, that's not how it works. So since 2018, I built my business. I currently have 5 agents on my team. We do business all across the country. We work in conventional practices, so we deal with the A lenders. We deal with B lenders for a little bit more, credit-sensitive situations or unique scenarios. We deal with MICs, which are mortgage investment corporations, and a large portion of our business is direct private lending. So we're dealing with individuals who are lending cash off their home equity line of credit, using their registered retirement accounts, lending on secured mortgages. So lending their money secured on a mortgage on an investment property. In saying that, we don't deal in the consumer side of private lending. So the consumer side of private lending is Bob and Mary. They got a boat, they got their credit cards, they're looking for a second mortgage to consolidate that. That's not the type of loans that we're going to do.
Yeah.
We're going to lend to John and Susie, who are putting a suite in their house. They need a second mortgage to do the value-added renovation. There's a clear exit strategy. They have comparables that support the higher value.
Yep.
They're pre-qualified, so that's the type of lending that we do.
So you stick to what you know, right?
Yeah.
I always find it's funny how you'll deal with people that are handling loans for A lenders in the bank, and they've never owned a house. They don't understand necessarily what they're dealing with. They just pump it into a system. The system has a risk profile associated with it, yes, no, and there's no creative solutions, right? Where you guys are offering different solutions than conventional products based on people's needs, right? And I think we've seen that in the marketplace. That I was reading an article about it, about CMHC's forecast of the housing market dropping 18%, and a lot of secondary lenders coming in and taking ground on them in terms of just conventional mortgages. And CMHC is now backtracking, and they're actually opening up, and they haven't made a public statement, which is hilarious. They haven't said we were wrong, but they're changing their policies little by little. Steve, a little bit of your background so they understand who you are.
Yeah, so my background, and Ruth and I actually got started about 5.5 years ago. We got started on a real estate investing journey.
Yeah.
It was something that we wanted to do because from a retirement perspective, we said we need to do something different than what we're doing. And so 5.5 years ago, we embarked on this real estate journey. Got to know Kyle real well, and between Kyle and I, he said, "Why don't you become a mortgage agent?" So back in February is when I got my license, and I'm learning from the School of Hard Knocks.
Yeah.
Knocks. Kyle and I, we work together on all sorts of different solutions for people. That's what we do. We bring it's amazing how unique every situation is, and we have to dive in and understand all the details and figure out the best solution for them.
And Ruth really understands the backside of the real estate side of things too,
she's
right?
a
Like
realtor,
she's incredible to deal with. I've had the pleasure of dealing with both of these gentlemen and their spouses on some deals that we've done in the past, and it's been pretty incredible to see their strategies, right, and how they incorporate it. And now I think what's happening is they're getting to that next point where you can keep doing it for yourself over and over, which I'm sure you guys will
Right.
keep doing,
Yeah.
but the real gratification comes from helping other people.
Yep.
And, I think there's a little bit of a misnomer and myth when it comes to private lending that, all private lenders are literally just signing a check. They don't care about you. They're not involved in the transaction
Right.
over and beyond. Here's my sheet. You don't pay me. I'm taking your property. Now, those people are out there. I know some of them. I don't
Right.
send them some of my clients because
yeah.
it's got to be a good matchup, right? So, like, how do you guys really look at creating relationships, or when you're lending money? Let's talk private lending first. When you're lending money out, how do you look at the people or their strategies and really find the fits for what you do?
So from my side, and I'm fully transparent about this, I'm not a lender myself in my business. I own real estate, I buy real estate, and I marry people together. So I have people who are looking for a great rate of return,
Sure.
and I have borrowers who are qualified, good people who are looking to borrow that money and make an investment and pay that money back. So what I'm looking for is certainly a lot to do on the character side. I'm looking for somebody who will go to McDonald's and work a job to pay this money back if everything goes sour.
Yeah.
I want to know that no matter what, my lenders are safe and secure. And maybe Steve can touch a little bit more on what you look for individually.
Well, it's the same. Like,
Yeah.
it's all about trust. And I want to understand the character really, really well.
Like their
if
background, like their story,
background,
everything,
I want to
right?
understand where do they come from. I even want to even get to know their parents. A
Sure.
little bit. Like, what kind of parents were they for these folks that we're talking to? Because we marry borrowers and lenders together, and we want the lender's money to be protected. We want the borrower to get looked after as well, and the character. I can't say enough about character. And I'm a pretty good judge of character. I've spent a lot of my time in sales.
Yep.
I get to know people really, really well. I ask good questions that uncover character. It reminds me of a day on the golf course that we were talking to a guy, and we were. It alluded to the possibility of cheating, and I
Yeah.
kind of set him up a little.
Sure.
And he says, "Oh, you do those little character tests with people every now and then," and I do,
Yeah.
because and so Farad, you wouldn't cheat on the golf course. And actually, we were talking about that possibility. So, I pay attention to the little subtleties of folks, and it's really important.
I think it even goes to, like, if you look at the larger networking groups, a lot of people here, I see in other groups that we're part of, and we'll see conversations creep up, and you'll see different levels of people that are in the
Absolutely.
game, right? And like, you'll see some people saying things, and you can automatically see things in their character that you're like, you know what, that's probably not a fit for me. Or we jump on qualification calls. We were paddleboarding talking about this the other day.
Yep.
When we qualify clients, what we're qualifying them for isn't necessarily like, are you good enough to work with me? Is, are you a good fit for me?
Right.
Because there's people out there that are probably a good fit for you that do a different type of business than I do.
Yeah.
And I really think if you really qualify and that attraction mentality, you end up building a community that you want to support and help. And then, like you were saying, you end up having these people that are lenders that want good rates of return, that maybe don't see it in the stock market and
Right.
can see it in real estate, that now have a trust in you. Well, you have to honor that trust. So over and beyond the money,
Absolutely.
it becomes the relationship that you don't want to let that guy down,
Yeah,
right? And
yeah.
it's a very interesting dynamic. Now,
Yeah.
let's pretend you're a brand new, fresh investor, and you're looking for private money to do a project. How do you qualify somebody like yourself
Yeah.
that is going to put you in touch with a lender?
Yeah, so I want to tie into what you said right there about being the right fit. I have so many borrowers that when they're first starting out that are coming to me, and they're telling me what they think I want to hear. They're telling me
Right.
that, I only need it for 90 days. It's going to be really quick. Listen, I've
you
done enough.
catch me on that.
Yeah.
You often say to me, "Don't tell me what I want to hear."
Don't tell me what I want to hear. Tell me what the deal is. You're not helping yourself in the long
You're
term.
raising an alarm, right?
You're raising an alarm. Like, I've done enough projects to know that you're not duplexing a house and refinancing it in 60 days.
Right.
It's not going to happen. Even if you get it done in 90 days, it's going to take 30 to 60 days to get that refi paid out.
Yeah.
So let's be honest with ourselves about what the project is. And in order for me to match you up with a good lender, we got to make sure that your timelines match. So timelines is a big one where people are just making a mistake on that. Be honest, be upfront. If you need a year, request a year.
Right.
The second thing that I want to add in terms of the borrowers, you need to understand when we're asking about exit strategy, what's the exit strategy? It's important that you know what the exit strategy is for you and how you're going to get out of the deal. But we need to be able to clearly articulate that to the lender. So if your strategy is, I'm going to refinance on the back end, but you're only lifting the property 10% or 15%, there might not be enough equity to pay my lender out.
Yeah.
So just the answer of we're going to refinance, that might not be good enough. You need to be able to show, so I can articulate to my lender on this deal that, hey, listen, you're lending $400,000. The property is going to be worth $600,000 when the project's done.
Yep.
Which means at 80% loan to value,
It's 480.
480 on the mortgage.
Yep.
Which I can go to my lender and confidently say, there's lots of meat on this bone that even if everything goes wrong, your 400 is still secure.
Yep.
Even if they get an appraisal at 500, we can still get your 400 back. So a lot of the borrowers they're not understanding the exit strategy is just as important for you as it is for the lender. So just make sure you're putting both hats on when you're talking to your broker or you're talking to your private lender yourself.
And systemize it, right? Like literally, it's probably pretty prudent to be doing that anyways on your pro formas of what is my exit strategy for myself. And you should be able to take that document, send it to Kyle or Steve, and translate that to the lender and say, this is how I'm going to get out of this project, or if everything goes sideways. Because we get calls from private lenders all the time that say, hey, got this address thrown on my desk, this is what they want. Like, if I'm 70-30 on this, you know, am I going to get my money out, right? And I'm going to look at the worst case scenario. I'm not going to look at market data, because by the time this all happens, the market could have gone south. And I'm like, that's a no-brainer. Like, that property's worth that all day long. I'll greenlight the deal. But there's lots of deal that I haven't greenlit because I'm like, no, assume the guy's not going to do what he says what he's going to do. Is there enough meat on the bone to execute, right? So you kind of want to run a couple different situations, and you know, the worse you run it, your upside is massive from there. Because if you look at the worst case scenario and then you execute and you do it well, you're probably going to be very, very happy with the results, right?
Absolutely. And not only just put meat on the bone for the lender, most of our lenders want to be able to see that our borrower is profitable when this is all said and done.
Yeah.
Most of the lenders we deal with are, you know, hardworking, you know, middle to maybe upper class Canadians that, you know, have worked really, really hard to get where they are, and they're not looking to just make 12% on their money and, you know, rip everyone off. They want to see that the borrower is going to borrow that money at 12% and be profitable on the project as well, because if they're profitable, that money keeps rolling. The second that gets paid back, they want to lend that money back out. The borrower, they made money, they'll take it
Go
back.
do something else, right?
Do it again.
Because it's knowing that somebody's solid, right? Like being able to give that mechanic your car over and over and say, have fun with it, right? Like, send me a bill when you're done. You build these relationships with people, and you realize, like, say you build this massive community of, you know, lenders and investors and everything else, you'll have the 80-20 rule still applies. 20% of your investors are going to be deploying probably 80% of the funds. You're going to invest more in those relationships because, A, it's fun to watch people succeed. I was with a guy who's a monster, sold a company for a very large sum of money 2 weeks ago, and I told you this, I think. Like, I didn't even care about the transaction. Like, I was showing them the house, we were having fun. It wasn't the right property for them. I was just like, dude, I want to pick your brain. Like, everybody that meets this guy, I'm sure, wants something from him. I don't want anything from you. If I never see you again, this was a phenomenal opportunity. We developed a friendship after, and we're working together now.
Sure.
And, you know, he said the same thing. He said, you know, he got to where he got, which a lot of people would look at him and be like, man, that's unattainable. He sees people above him that are just like leaps and bounds beyond where he's at. And he's like, you know, the people that are doing it for the journey. And they're never satisfied. Like, watch the Michael Jordan documentary, right? Like, you know, you ask these people, how long did that high last? And they're like, a day, maybe. Like, I got the trophy, but then it's like, you know, what's next? What's that next stage of growth? And it's about growth, not goals, saying, I want $1 million because that's what's going to create, you know, freedom, and all my problems are going to go away. I think your problems are created by not doing the work to get you to where you want to be, which is qualifying the people that you're working with, having all your ducks in a row and understanding what the people you're working with want from you, and then identifying holes in the systems and constantly patching them, right? Like, I actually love that you're here as well, being kind of newer to that world. I think that's the best thing. I think if you hired somebody that was literally just 40 years in the business, they're broken. Like, I don't want agents that have been in the business for 25 years. because they do business how it's been done for 25 years, and they're almost broken to me. I want people that I can train from the ground up, because I can show them how we do business and how it's different than anybody else. And then when they see how business is actually done, they're like, oh my gosh, like,
Yeah.
how is it still operating this way? And you're probably
Well-
seeing some of those insights in the industry where you're like, you see things happen and you're like, man, like there's so much ground for us to take,
Well,
right?
people on Kyle's team come with that yearning to learn. Like everybody on the team
Sure.
wants to know more, and we spend a regular amount of time once a week just learning,
Yeah.
because there's just so much to know.
So you guys actually, you have
incredible.
like a dedicated time where
Mhm.
you're learning. What type of stuff are you guys digging into?
So it's everything from the mortgage process. The mortgage world is changing every single day.
Sure.
There's a joke that we made at the last one. It's called the 5 C's of credit. Is how you're qualified. There's actually the 6th C of credit right now, which is COVID.
Okay. So what
yeah.
are the 5 C's?
Capacity, character, collateral.
Did you say credit?
Nope.
Capacity, collateral, credit. I probably should have said.
Yeah. Maybe COVID.
Yeah, it's essentially how they're looking at you. So they're
Right.
talking about, where'd the down payment come from? How are you earning your money? What's your payment history? All the things that that you're always being asked in the mortgage process. That's the 5 C's of credit.
Okay.
So a big one right now is every single file. There's some element of COVID on it. So the
Not actually COVID.
not
like, you
actually
touch the
no,
file,
no,
you're not
no,
gonna get
no,
it.
we're-
Right.
there's what I mean by that is we need to explain how this person's income has remained stable throughout COVID and how this industry is protected going forward in COVID.
Interesting.
So an example is on
Pay stubs. Or-
pay stubs. Is your year-to-date income down? Okay, so were you laid off during COVID? What was the reasoning for that? Was your company just being super protective of the employees and decided to shut down as respect for the country? Or was their business shut down and their industry's now at risk? That will affect your future ability to make payments on the mortgage, and the lenders are concerned about that.
We just dealt with that on a lease file where
Sure.
they were concerned, well, is that an essential service? And it was tied to an essential service, so they worked straight through COVID. So it showed her the government declaration of that, and everything was fine. But yeah, you got to go an extra step
Yep.
because the banks are doing that.
Yeah.
Well, sometimes mortgage deals they'll stretch out. You won't. Timing just doesn't always work, and if it goes long enough, and you don't have a current, actually no older than 15-day pay stub on file,
Yeah.
They
the,
were
lender, the lender's coming back saying, need another pay stub, even
Yeah.
though you did all the work that you. Same with bank statements, all kinds of stuff that they're asking for more information.
And Steve made a great point there in kind of today's world right now. Timing. I'd love to
Oh,
tell
my
I'd love to tell clients that the refinance at the end of their
Yeah.
BRRRR or their flip to their sell will take 14 days. But guys,
Not a
it's just
chance.
not happening.
Yeah.
No.
It's taking 30 days. It's taking 60 days in some scenarios. And I know people don't like to hear this, but when an underwriter is evaluating a file, a primary residence purchase takes precedent. A rental
Right.
property purchase takes precedent because there's a firm closing date. The refinance of a rental property,
Doesn't matter to them.
it gets pushed down in the pile, and I hate telling my clients that because it's always at the top of our pile. It's the first thing that we want to
Yeah,
do for you,
Right.
but we can only move as fast as the institutions that we deal with.
I've learned to nag really well.
Yeah.
I'm amazing at that as well. I learned that over the years, like systemize the nagging process.
Yeah.
Literally, like in
Right.
our CRM, we have touch points with the lawyers and the lenders, and
Nag
like
1, nag 2, nag 3.
literally,
Dates.
like almost every day. Our admin's incredible at it. She'll just hit one button every day, and then they'll just do it to just get you to stop emailing them.
Right.
But if you don't, you're gonna get pushed to the bottom of the pile as well. But I think it also comes down to relationships, probably
Yep.
that you
Sure,
have
absolutely.
with the institutions,
Yeah.
right? Like if they
Yeah.
know that you're going to be somebody that's got their ducks in a row, it's going to be easy to process. They're not going to have to spend 2 weeks going back and forth with you.
We're
They may-
likable with our lenders.
They probably
Or,
process your files quicker than somebody who's just a mess every time they email them. Like they
Yeah.
probably really get pushed down to
Yeah.
the bottom of the pile,
Yeah.
right?
It's absolutely true.
So let's stick to conventional lending for a second. Maybe give the audience a bit of an update. What's happening with the banks? Like maybe just bullet points, and then maybe some myths that are out there in terms of what people think the A lenders are doing right now that they actually aren't.
So they're certainly scrutinizing every file. Those of us who are using leverage to build our portfolio, they want to see things like cash reserves. One document request that hasn't been as prevalent in my early career as a mortgage agent, that's become a lot more prevalent now. Financial statements if you're
Okay.
incorporated,
Right.
and showing a profit in that business. So it's great if you're paying yourself something, but if that business isn't profitable, the lenders have concern about the amount of leverage on your portfolio. So starting with cash reserves. I know as an investor, there's nothing I hate more than cash sitting in my checking account. I want that out. I want it at a higher rate of return. I want to buy another property. I want it out. But if you're going to the lender for your 5th or 6th rental property, you have 1.8, 2 million, $3 million worth of total mortgages. The lender wants to see.
Can you cover that if
Can-
everything stopped?
And secondly, this is another thing, and I put a post about right when this came out. Mortgage deferrals. Take only what you need. My advice is don't do it. But with that being said, I understand that certain people have gone through some hard times. Maybe their tenant didn't pay, they lost their job. 100% don't miss a payment, take the deferral. But I've also seen people posting that this is a strategy. This is a create cash flow strategy.
I've seen that as well.
And guys, it is, please don't. If you have a deferral in place and you're able to make the payments, please cancel it now.
It's not free money.
It's not free money. What it came out, they said that it won't affect your credit score, which is accurate. But right on your credit report, mortgage in deferral, natural disaster.
Yeah.
So I'm in the middle of a big refinance myself right now, and the underwriter made a point to come back and say how impressed they were that a younger guy who's got all these properties didn't take a single deferral throughout the entire mortgage process and was up to date on all the payments. So they were impressed with my capacity as a borrower, that I had my cash reserves, I had my 3 months in my account. So those are the type of things that if you're going to scale and leverage right now, show the lender that you're a responsible business owner. I'm trying to think what else. What else is going on in the world right now?
And I can't think of-
So as far as A-lenders, do you have a sense of what they're prepping for in terms of, just when you're talking to them, conversations that you hear happening, like do they think a second wave is coming? Are they kind of prepping for a fallout from all the government payouts?
There is some concern.
Yeah.
Yes, there 100%. There is some concern there.
They're in the risk business though, keep that in mind. Right?
Yeah. But at the end of the day, guys, we're still closing deals every single day of the week.
Yep.
People who were laid off over COVID are still able to get if they're back to work now. And an investor who did take a deferral because maybe something happened, as long as we can tell the story there about what happened and why they took that deferral and why things are different now, we can still get financing, as long as your other things are buttoned up. Profitable financial statements, cash reserves, up to date on all trade lines. So really showing that. And I love what you said about having your ducks in a row and submitting a clean file. Our brokerage standard now is we do not submit. We want to submit broker complete files.
Yeah.
So we want to submit files that have everything up front. Now, in order for us to do that, we need our clients to deliver that paperwork to us.
So they're going to annoy you as much as anybody else.
Yeah,
right?
Exactly.
Steve is going to be all over you. I think Anna's on this call. Anna's going to be all over you. So
That's awesome.
it's crazy how stringent we need to be. How we need to get good, accurate information. Even something as simple as not getting a JPEG
Yeah.
of a property tax statement, it just annoys underwriters.
it
Yeah.
does.
I know this is behind the scenes stuff that most people don't know.
They
that are
need
on
to
the
know
call,
though,
but they
right?
need to know.
Because they
This is-
think they're out at dinner and they get an email from you saying, hey, that photo that you sent me, that thing doesn't work. I need an original. Like, it's not because you're taking joy in sending an extra email. It's
No.
because you want to make sure the file gets done and you don't have to make a call saying, hey, they
Exactly.
dropped your file because they
That's
didn't
right.
have what they needed
Exactly.
in time, right?
And I can explain to the audience why that's so important. Is you got to understand that whether you're incorporated business, whether you're a sole proprietor or just an individual buying investment properties, if you're on your third, fourth property, they are looking at you as a business.
Yep.
And as a business who maybe has over $1 million worth of mortgages and several rental income, if you don't have a proper printer, scanner, fax system,
Yeah.
they're a
Yeah.
little bit concerned about the viability
Yeah,
of your
true.
business.
Exactly.
And I know that's to answer our clients' questions, does that JPEG have all the information we need?
Yeah.
Yes. But when we submit it to the Bay Street head office underwriting, and the third person picks up your file who's about to fund it, and they see a blurred image in a property tax bill, that's going to cause that last minute phone call where the broker's calling you the day before closing saying we need that new statement because there's an issue here.
Well, sometimes mortgage statements come in without addresses on them.
Come without
Like
address.
without the property address.
Yeah, things that you don't even know that you need, but I mean equated to Dumb and Dumber writing on a napkin, I owe you this much money. Like that's how they're going to look at your file compared to people that are investors that are, maybe in the same capacity as you, but just are much more organized. It just presents better, right?
Yeah.
Like it's an ease of doing business that they're going to want to lend
That's
you
right.
more,
Yep,
right?
That's right.
Everybody get your personal net worth statements together.
A lot of people
Yes.
don't even know what their personal net worth
Right.
is. That's another conversation entirely,
Yeah.
right? But I think
something else that comes up that I run into, especially with business for self people, is they don't show any income.
Yep.
And that's a concern.
yeah,
And they're doing it for tax purposes.
sure.
Yeah.
But the thing is, you're reducing your income to save tax. That doesn't help
It's-
a whole lot.
We brand ourselves as creative brokers and investor focused. At the end of the day, if you're not showing any income, it's going to be very, very difficult to get you conventional financing. Now, talking about private financing,
Yeah.
that's a different ballgame.
I was going to say, let's switch to that right
Yeah,
now.
that's a
Let's go
different
from
ballgame.
your
Yeah.
kind of risk managed A-type lending, like
Yeah.
you need income, this.
Right.
Like you guys will look at a business owner that maybe is making millions a year, but on their bottom line, they're showing nothing because they're putting it all back into the company. And you understand that they're growing the company
Yep.
and they don't necessarily just want to pay taxes. How do private lenders look at somebody like that?
For the most part, the private lenders that we deal with, a lot of them are business owners themselves. They totally appreciate that. They understand what's going on.
Yeah.
As long as we can show the appropriate paperwork to say, hey, here's the company's financial statements. Here's the last 6 months of top line sales for the business. Whatever that document might be to support that, there's going to be no issue getting a private loan. Private lending is based on the equity in the deal.
Okay.
So our standard now is we need an appraisal on every property. Recently, 90 days is best. We can make 6 months worth. If it was 6 months work if we're in a market that we know. We need an appraisal on the property to know what the equity in the deal is. We need to know how much you need. So often I hear, I bought the property for $300,000. How much do you need? Well, it's $300,000. That's not going to work, guys. we need a little bit more detail on how much do you have in the deal. If you're looking for 100% financing, say that up front, and it might not be so. This is a talk. We've talked about this before, haven't we, Justin?
Yes, we have.
My belief is 100% financing isn't given; it's earned.
Yeah.
You've negotiated equity in the deal. You bought the property for $350 or $300. It appraised at $350. I can lend you $300,000 if it appraises for $50,000 more. You earn 100% purchase price by buying a great property.
And also relationship. Like
Yep.
you're not going to do that for somebody that like the amount of private messages and just cold calls we'll get. I'm going to invest. I don't know how to get private money. I'm like, you got to go earn those relationships first before you're going to turn around and I'm going to start digging up deals and deploying resources, because no lender is going to lend you money unless you have a track record with them. So the person really matters in that situation,
100%,
right?
100%, yeah.
So
So back to character.
yeah,
It's a character, yeah.
and it's absolutely critical. I think it kind of goes back to why are you investing? What are you looking to accomplish? The very beginning of the podcast where we talked about having a plan in place of what you want to do. And, do you look at investors that stick to what they know or have one kind of investment strategy type versus others that are doing like a multifamily here, a burr here, a duplex here and there differently? Or do you look at them the same?
Depending on their level.
Yeah.
We have some pretty sophisticated investors who do all elements of
They can
investing.
do that.
And do they have a team that kind of helps them do the different aspects of it?
Yeah, so those type of people, I'm okay if they got a multifamily this week and flip that week, that's no problem. But if it's a cold call deal and you're saying, well, I'm looking at a flip, I'm looking at a burr, I just want to know that you have 100% financing available.
I don't know how many of those we get.
And they're really nice guys, right?
Yeah,
like,
they're-
they'll spend 45 minutes talking to
Absolutely.
somebody about something, but I think,
Absolutely.
the hunger and the self-education aspect of it and reaching out to people in the network and giving them something of value and then earning that relationship will help you get there. Because if you're one of those people that have heard about the OPMs and 100% vendor financing and all these things, they exist and they're out there, but you really got to have something of value to earn that first. right? I think, the one thing that you would want to say to somebody that calls you in that is what's that baseline? Like, what's your value prop in the transaction? Like, how did you get that equity, right? And you guys need to be able to answer that question before you can expect somebody to just sign off on a deal.
Something as simple as, do you have a renovation budget? And if they go,
Yeah.
It's scary.
it's scary.
It's scary.
And so,
But they want 100%.
yeah. And,
Right.
getting a renovation budget, you can Google that. Like, you can literally go into these groups and ask somebody that's done this before, how do you get a renovation budget? Now, you may get some advice that's going to not necessarily be the most efficient, but when you do one, you dial that system in. You cut out the fat, right? Like, I really liked hearing that you guys have these weekly training meetings, because we do the same thing at Prime, and I still think we're so far from where I want to be, right? We talked about this the other day, right?
Yeah.
It's like, I look at what we're doing now, and I ask our clients flat out, like, what sucks about the real estate industry? I actually had this conversation with Andrew Hines, last week. I'm like, what holes do you see? And we had a really good little back and forth about it. I'm like, okay, I talked to the team. I'm like, he's fresh. He hasn't been in the real estate industry. He's unspoiled, just like we were talking about before. What is being done now? What can be done differently? And in the real estate industry, a lot. And then just go at it, change your systems, adapt, review, and then repeat. So you guys are constantly doing that, probably in your own investing journey, as well as on the lending side of things.
Yep.
And I think you got to be on top of it, because as we talk every single day, something new happened that we need to react to.
And different ways of doing business, or you see somebody and reaching out to those people and asking them, right? And quite often, like, when you get to the level that you guys are at in terms of people you're dealing with, as long as you can speak the language to a certain degree, and they see that you're not just there to kind of leech a relationship, burn a bridge, and move on, they're more than willing to share. Like, some of the coolest people I've ever met are the most humble people I've ever met too.
Right.
Absolutely.
So how do you, last question before we sign off on this, when you're developing relationships with these lenders, how do you develop these relationships with the lenders? Because it's the same thing as the audience that wants to develop relationships with people like yourself. How do you go out and create that community that drives the business that you want to do?
So there's lots of good deals in real estate, but if the deal is not accomplishing your goal, you are spinning your tires. So when we're talking to our lenders and we're building those relationships with our lenders, it's very important that we understand what their goal is. What are they trying to accomplish? Is it income? Do they need income right now? Or is it about growth? Where they really love their career now, they're happy in their career, and they just want to grow their money as much as possible, and they'll worry about getting income off it later. Or do they need income now? Is timeline important? What's their,
So let's break that
Right.
down for a
Right.
second.
Yep.
So you
Yeah.
have one, which is like just cash. They want a certain amount of money every month getting
Yep.
just bumped into their bank account. And there's other people that want to take 100, turn it into 2, take 2, turn it to 4, turn 4 to $1 million, because maybe they have a plan to invest it in something else,
Yep.
right? Okay.
Yep. So and there's different types. I'll use an RRSP as an example. You can get a higher rate of return in your RRSP if you're willing to defer your interest.
Exactly.
So if it's a 1-year deal and it might pay 10% monthly to your RRSP, and if you're retired, you might need that money coming in. Or if you're saying, I'm not retiring for 5 years,
You can defer that 10%.
I'll take 12. If you do no payments, if I offer you no payments, will you pay me 12%? And I have borrowers who will take that all day long because it helps them from a cash flow perspective.
So you have a borrower that's got the cash flow, and then you'll have the other guy that doesn't need the cash, right?
Exactly.
Right.
So
Interesting. Sorry, what were you going to say?
I was just going to say that there's different people in different stages of life, and that's where we're at. Ruth and I, for example, are at a different stage in life where, building wealth isn't really necessary. Eventually, when I decide what retirement is, because the definition of retirement that most people talk about is quitting work. I consider retirement as doing what I want when I want.
Sure.
And if that means I want to work, then I'm going to work. And that's why I'm a mortgage agent, because I enjoy real estate and all of that kind of stuff. It's about, where was I going with that?
Well, the different stages
just
of
different
life, right?
stages
Where
of
people
life.
are at.
So we're in these different stages, and depending on where you are, you might want cash, right? But you take $100,000 at 12% for 6 years, it's going to be worth $200,000.
Yeah.
Right. And so someone that's 40-ish is they're going to build wealth. They're going to defer it.
They're all looking for different
It's
things.
different
I think
things,
you
right.
touched on
But
something as
we
well.
get to know it.
Yeah.
Yeah.
And I think, we've said this before, but, wealth doesn't necessarily come from your job, right? Like you're never going to get wealthy just trading time for money. It
Right.
comes from the depth of relationships. And what ends up happening is you do a deal with somebody here, it turns into a relationship with you and them on the
Yep.
golf course here, it
Yep.
turns into another opportunity that changes your life completely. Like 5 years isn't a very long time,
No.
but look at the journey that you guys have had and
Yeah.
kind of where you've
It's
come.
been great.
The time that I've known you as well, right? Like if you put your brain back in that body back then and thought what you think now is possible, it's two
Oh,
completely different things,
totally
right?
different.
Because you see
Totally.
kind of behind the curtain, and that's what we're trying to do here is share behind the curtain with the audience and give them a little insight into your world. So definitely appreciate the insights, and if you guys ever want to reach out to these guys, feel free to DM me directly. I'll put all their information in the comments. This will be reposted on YouTube and in the group, and we're going to end the episode here.